Hello, Sector Watchers. Welcome to this 7th episode of Sector Spotlight on Tuesday, the 12th of November. This is your weekly update on sector rotation and anything remotely connected to sectors, relative strength, and/or rotational analysis. My name is Julius de Kempenaer, and I'm your host for today's show. With me are Zach and Rachel for technology, but above all, mental and moral support. This show is live and interactive, so do not hesitate to participate in the online chat. It is open right now. If you're too shy or prefer other ways of communicating, email and social media channels are open 24/7. And please do send in your requests. We'll look at all of them. And here is what we will be doing today. We're going to look at some sectors, of course, see what has happened, get some ideas about coming weeks. And then I think I want to zoom in on what's happening in the industrials sector. As usual, we have a break somewhere in the middle. I did get a couple of questions, and we'll deal with that and anything you send in during this show. And then finally, we're going to talk about some crypto data on RRG. That is brand new, and I'm looking forward to share that with you. Without that, let's start. Bring up some RRGs and some pages. So let's get started here. This is my DITC article of today. That was a very short one, and I like to bring it in for the discussion on the sector rotation that we're currently seeing in the US, because I think it is actually pretty bullish what we're seeing. It's been under the radar for a while, and now all of that stuff is getting out there. This is the daily RRG covering the last 5 trading days. And if we sort it on percentage change, we'll see that technology was the best sector last week, followed by materials, healthcare, and financials. And the stuff that was under the S&P 500, only slightly industrials, but on the weak side, we have communications, staples, real estate, discretionary, energy, and utility seriously underperforming. The chart that I used in today's article was the weekly one, and you know that I prefer the weekly. It's my time frame. It's a little bit longer term. And what we see here, I think, is a pretty bullish rotation. If you see the clustering of those tails, then what strikes me and what immediately catches the eye is the clustering of utilities, real estate, and staples. And they are very rapidly rotating through weakening, and it probably won't be long before they hit the lagging quadrant. So they are the underperforming sectors at the moment, and you can actually see that they're at the bottom of the list over the 5-week time frame. Energy is still a little bit of an outlier. It's strong on momentum, but it's weak on relative strength. It's catching up very rapidly, but if you measure it on the RS ratio scale, it is still the weakest sector out there. So I'll be very careful with energy. Short-term momentum, pretty good, but I really doubt whether it is strong enough to pull this tail all the way into the leading quadrant. The sectors that are doing really well are industrials. That's the one that has just crossed over into leading. Financials, we've discussed that last week. Technology is actually rotating back into the leading quadrant from weakening. And as you know, that is a pretty bullish rotation. So we were in weakening, we hooked back up, and we came into the leading quadrant right now. And then we have the XLB materials ETF. I highlight it for you right here. It was and still is pretty close to the benchmark, but what I like here is the hook back up. So it came down, it sort of stalled. Look at how that tail just shrinks over this period. So here it's pretty long, 5 weeks. And then in the next 5 weeks, it almost goes to a static dot like here. And then it jumps and hooks back up. And we're now inside improving and heading towards the leading quadrant. Let's pick out a couple of interesting charts here, and let's start with the bad ones, because we can just very quickly go over them. So here is utilities. That seems to have completed a small double top formation. The rhythm of higher highs and higher lows is still there, so it's not a super negative from a price perspective. But I do think that relative strength is rolling over, and that is why it's in the weakening quadrant and heading lower. If we do the same thing for real estate, we've been tracking that sector for a while now. You see that that is rolling over. You see that the same thing is happening inside the RS line, and the RRG lines are both heading lower, with RS momentum already below 100. That's putting XLRE inside the weakening quadrant. And then we'll have XLP, and those three were the traditional defensive sectors, so to say. And if you look at staples, as you know, this has been or was the sector that was driving the market higher. But over the last, this is like, I don't know, like 2-3 months already, basically nothing has happened. We've tried a couple of times. You see these three peaks all clustering in that same area. That's the area around 61.5, 61.60. And it doesn't get any higher. With the market pushing higher, that means that it's losing relative strength, and we're very close to rolling over and crossing over into the lagging quadrant. Quickly, the energy sector, because it is kind of interesting that it's showing such strong relative momentum. That's the green RS momentum line that's pushing above 100. But if you look at the RS line that is driving those RRG lines, that is still a serious downtrend. It's sort of improving because it didn't push much lower than the low in relative strength that we saw in August. But I'm still not super happy with it. And if you look at the price chart, then there is a lot of overhead resistance that can stall any rally. And if we don't get any positive price momentum, then it will be very difficult to get positive relative strength versus the S&P 500. Now, how different is that for sectors like financials? We looked at that, I think it was last week or the week before, extensively. This is the one that we looked at. It's breaking out. This is, be careful, by the way, this is the adjusted chart. If we look at the unadjusted, and for financials, as we discussed last month or last week when we did the monthly charts, that's a pretty significant difference, because we're now fighting this all-time high resistance, which is like just above 30, 31 area. That's where all-time high resistance comes in. So I'll be looking at, from a price perspective, I'm looking at this 30, 31 area to offer overhead resistance. When that breaks, financials is going to really, it's difficult to say like skyrocket, but I really think that'll be a very good thing for financials. What I do like is the fact that we've broken out a couple of these intermediate levels. This 28 level was pretty important. We took that out without any hesitation, and we're now working our way higher. And what's especially strong is the turnaround that we're seeing here in the relative strength line, and that's being picked up by the RRG lines. And that is what is driving XLF into the leading quadrant over the last couple of weeks. So we'll be keeping a close eye on the developments of the financial sector, but it is one of the better sectors out there. There is no doubt about it. If we go to technology, that'll be a very quick one because we've been seeing that along. This is a very great chart. You know, that 82.5 level was taken out. That was, you know, the signal to go higher. We never looked back. Relative strength taking out its highs here, last 3 highs, so that is all good. And we're now putting in a low in RS ratio way above the 100 level, and RS momentum is crossing back, and that is causing XLK to actually cross over from weakening into leading. Now, the sector that I want to focus on a little bit more in depth today is industrials. And I know we've looked at it, at least from a sector perspective, last week on the monthly charts, and I was very, I think I was pretty enthusiastic about industrials, and I still am. Why is that? Because we are breaking a very significant resistance level here. That is the, let's say, 78 and a half area. We've been touching that since 2018, so that's 2 years, 1, 2, 3, 4, 5 times already. We've broken it 3 weeks ago. and we're still pushing higher. So that is a very clean, crystal clear break of resistance. If we go back, that is a very good support level. We can expect massive support there. The question is if we ever get back there, because there is good follow through in demand, which is pushing prices higher. And what we see here is that this relative strength has bottomed out and is now completing sort of a double bottom here in relative strength. And the RRG lines are just picking up, and that's what's putting the XLI, the industrial sector, just inside the leading quadrant, which makes it probably, well, you got to be careful here, but one of the most interesting sectors at the moment, because it still has a long way to go before it goes way outside to the right. So it's got a lot of relative strength that it can cover going higher. And from a price perspective, there is little or no resistance to be expected. Now, if we go into industrials and we load up the industrials members, this is going to be a little bit messy here, but stick with me. And what I'd like to do here is sort this RRG on industries and see if we can find any industries that are particularly interesting. And the way I do that is I select them and I look here like aerospace. That's green, blue. So they're all over the place. So there is no significant direction for aerospace stocks. Similar for airlines. They're like all over the place. Now, I'm not going to cover all of them, but the ones that I thought were very interesting, the first group that I want to share with you is commercial vehicles. There's 4 stocks inside the S&P 500 in commercial vehicles, and commercial vehicles obviously is part of the industrial sector. So this commercial vehicles industry within industrials, I think, is worthwhile keeping an eye on, and that's Deere, Caterpillar, Cummins, and PACCAR. That's Deere. That's like John Deere. That's tractors. I own a tractor now. So Rachel, remind me that next week I post a pic here of my tractor because it's actually a pretty cool toy.
That would be awesome. Thank you.
So if we look at that and we bring that up, let's start with the premier tractor company. Look at we bring this up. This is a super nice one. Be careful. This one is comparing to SPY as a benchmark. I'm going to put that to XLY, so we stick with apples and apples and oranges. And this break is very, very nice. So this is a very nice stock inside industrials. Relative strength has plenty of space to go. And then let's quickly go over these stocks. Caterpillar. I think it's less interesting than Deere because this is coming out of a downtrend and reversing, so there's still plenty of upside resistance, or there's plenty of upside potential, but there's also some overhead resistance coming in. Let's say this cluster of highs here near 155, and then obviously the all-time high at 165. That needs to be taken out. And the next one, this tail is actually pretty nice. Cummins, that's CMI. Let's look how that looks on the price chart. That is also like these are really nice, like Deere and Cummins, because they're breaking all-time highs. That's good. And I think someone, maybe it was Dave Keller, who tweeted it this week, and he pushed a quote of someone, can't remember, said, no company that makes new highs has ever gone bankrupt. I think that's actually a great quote because it's true. So let's put some fundamentals in. The odds for Cummins and Deere going bankrupt in the next couple of months, very, very low. So here's my 2 cents of fundamentals. And then PCAR to finish up this group of commercial vehicles. Nice shot to new all-time highs. This one is actually already way ahead of it, and you see it also here in the relative strength. So from a trading perspective, this one, I don't think I would like to chase it. I think that if we get some setbacks, then this is a very good one to pick up. But like Cummins and Deere that are just breaking out, they're very good because they have just broken resistance and they got plenty of upside to go. Now, there's one more group here inside the sector that I think is interesting. And where is that? That was the diversified industrials. Now, it doesn't look like that at first, but let me browse you through those. So that starts, and then Honeywell is the last one. So if we look at those, look at where they are. So they are pretty good, inside leading, strong. This is picking up. It's weak, but it's good on momentum. GE, let's look at GE, because that is coming back to life. You know, we've tried it a ton of times in the last 2 years, and you know, this is an interesting chart. Triple M going in the right direction. And here, this one is in weakening, but it's actually coming back up. So that is a very interesting one. And then we got Honeywell that is inside the lagging quadrant, but on strong momentum. So in general, this group, Honeywell aside, actually is doing pretty well and showing pretty good. Where are you? Diversified industrials here. There you go. So let me go back. So what was I? GE. Where is GE? Oh my God, this is nice. Wrong way around. There you are, GE. Very strong. Now let's look at this one here, and you see that this is it's been a massive downtrend. I remember when I was with Tom and Aaron on Market Watchers Live, somewhere probably in this area, we've been talking about it, and is it going to happen? Is it going to happen? It looks nice. It actually never really happened, and apparently the stock needed about a year more time to actually bottom out and break out higher, and it looks as if it's doing that right now. So I'm actually very interested in monitoring GE. We're going to do one more of these industrials, and let me get you. Come on, diversified industrials here. SWK and ETN. Let's do SWK. There you go. There's another one that's breaking above resistance levels. We need a break in relative strength itself, but the RRG lines are simultaneously moving higher. That's a pretty strong sign, and this looks like a pretty good follow through. So inside industrials, the diversified industrials and commercial vehicles, I think, are the two industries that you should focus on in order to outperform this industrials, which is in itself already outperforming the S&P 500. We're going for a quick break, and then we'll be back with some questions and crypto stuff on RRG. And we are back. Rachel, did we get any questions? I'm looking with you right now, and I think we did. Tell me.
So let's see here. Kelly asks, XLF5 weekly ending on November 4th, 2019 matches XLF25 daily ending November 8th, 2019. Is there a rule of thumb for this date variation, or is it just a calendar issue?
Whoa, that's an interesting question. Let me bring up that chart, actually. So we're talking about XL5. I assume she's talking about the period, so 5 and 25 weeks. So we're going to go to November 4th. And let me bring charts, tools, RRG, side by side, so we can actually see what's going on. Same group, XLF, and then make it 25. By the way, there is no, this look back period does not or should not actually, this is interesting. You've got a point. on the 4th of November. Hang on. So 4th on November 25 on November 8th. There is no November 8th. There is November. This is the week ending November 11. So that's this week. So this is yesterday's close. But the 4th of November, when was that? That was
4th of November was Monday.
Yeah. So the RRGs, the first day. So it looks at the week of November 4th, that is started November 4th. So if we browse back, October 28 was a Monday, October 21 was a Monday, etc. So when you look at it, so this week is the week of November 4th. It started November 4th, and that is exactly the same. So this position of XLF, so the 25 and 5 doesn't make a difference. It puts XLF exactly on the same spot on the RRG. And then today is the week of November 11, and you see that it is exactly at the same spot. So I hope this answers the question, but I am not sure. Is there a rule of thumb for this date? So there's no rule of thumb. It is, and it should be exactly the same, because the length of the tail is just cosmetic. It just because if we do this and we make it 25 or 30 weeks, that's difficult even for me. It's hard to see. So I always try to tell people to try to balance the length of the tail with the number of securities on the plot. So here is spaghetti, but here it's readable. If you go to, I don't know, asset classes, it's much easier to have longer tails because there's a lot less securities there. So that's it.
Okay, and we have another question from Rudy. He says, on the weekly world sector RRG chart, the TSX compared to the $DJW is heading southwest. Weekly price chart for the TSX is suggesting the opposite. Please comment.
Weekly world sector. Let's see. I don't think we have that. That's not a predefined group. I just put that in. So it's dollar TSX.
Yes. And $DJW.
And then compared to dollar DJW. Oh, that's a nice rotation. Well, this is negative. It's heading southwest. Weekly price chart for TSX. Let's bring that up. Dollar TSX. Yeah, well, this is a pretty. Let me change this to dollar DJW. So we got apples and apples and oranges and oranges. There you go. This is a great question, and I'm going to give you a great answer. This is the whole issue of relative strength. This price chart in itself is not bad. It's actually pretty good. It breaks out. We have this high, and it's going higher. There's no problem with that. The issue is there's other markets that are doing much better compared to the rest of the world. And the good thing that Rudy did is he actually used the underlying indexes. So he's comparing indexes with indexes and not ETFs with a currency component in it. But if we stick, for example, dollar SPX here, then we can see the difference. You see that SPX is much better than TSX because it's still on the right-hand side. But there are also other markets that are actually doing better. I'm going to load up the international stock market. Maybe it's this one that he was using. Here you go. This one here. So here, like the Nikkei and the Russian index and India, they are doing much better. And SPY is pretty close because it's a big component. But this is totally cool. There's nothing wrong with the price of TSX. It's just not as good as the rest of the world. And that's what it is. Let me start and do crypto. We had a couple of charts on something else, but I'll save those for next week because we have 5 minutes to go, and I'm going to use these 5 minutes to talk about cryptocurrencies. I'm sure that you may have noted that StockCharts since last week is carrying cryptocurrency data on the system, and you will find them if you go to your dashboard. There is actually, let me bring this up here, a widget that has cryptocurrencies. And at the moment, we have 15 of the biggest cryptocurrencies available. And you can just make charts of those. Like you can do like any chart and bring them up. So dollar BTC. The coding convention is what you would expect from currencies. So Bitcoin versus US dollar is BTC USD, and we have a ton of others that are there. The charts, I'm sure you can just look at those charts and read them, etc. But how cool would it be if we would make an RRG of those cryptos? And there's a big debate on whether you like currencies, cryptocurrencies or not. In the end of the day, I think even if for educational purposes, they are the perfect example of supply and demand, because there is little or no fundamental valuation that you can put on top of a cryptocurrency. So this is pure fear and greed and supply and demand at work. So everything technical works pretty good on cryptocurrencies. These are the ticker symbols. So I said, Bitcoin, and we have Litecoin, and there is a ton more, Ethereum, XRP. What you can do is you can actually, and let me just, for speeding up sake, show you an RRG. So what you simply do is you load up all those ticker symbols, comma separated, in the symbols box. And then when you want to compare them to the US dollar, you use the symbol, the benchmark $1, and then you get the rotation of those cryptocurrencies versus the US dollar. And you can scroll through time as you're used to. What you will note here is that they are sort of moving in tandem, because they're all sort of, Bitcoin is the big one, and then they're all tied to Bitcoin. So, all cryptos in tandem are losing strength, or all cryptos in tandem are gaining strength versus the US dollar. Now, if you're really into crypto trading, you may be interested in a more interactive or inter-crypto. And what you do then is, instead of using $1, which puts it against the US dollar, you put it against BTC USD. And now the benchmark for this rotation is actually Bitcoin. So now you see the rotation of those cryptocurrencies versus Bitcoin, and you get a better handle versus the benchmark. Because I think that Bitcoin is actually the de facto benchmark for cryptocurrencies. We got to speed up here. I'm sure we're going to come back to this crypto stuff later on. There's one thing that I want to share with you before we wrap it up here, is that we're looking to add a new segment, and I'm not going to copy the 10 and 10 from Market Watchers Live or the 3 and 3 that Dave Keller is doing in the final bar. What I want to do here at the Sector Spotlight is pair trade ideas. So if you have any suggestions for pair trade ideas, and if you don't, I'll come up with an idea. Every show, I'll bring one pair trade idea using RRGs. So that's for further entertainment and trading idea purposes. Pair trades, that's going to be our big thing. Anyway, this was the 7th episode of Sector Spotlight. I thank you for watching. Please don't be a stranger and stay in touch. Hope to see you back next week, same day, same time, every Tuesday, 10:30 to 11 a.m. Eastern. Meanwhile, if you want to read more about sectors and RRGs, please go to the RRG blog on StockCharts.com, or even better, subscribe using the link below each article to make sure you'll receive a nudge every time a new article is posted.